Welcome to Mindset UT's markup video. I'm going to go ahead and go over marking up some indicators today. EMA, stochastic, and MACDs, the numbers for just placing your trades and just feeling the smoothness of your setup. Because I like to feel comfortable. When I place my trades, I like to really understand how it is that I want to approach my trades, whether it's long term, whether it's short term. Today I'm going to be going over basically the intro to trading numbers. So basically where everybody starts. After time, you guys can go over the next videos that I'll be going over on the indicators, going over the faster paced market. So if you want to go in and out of your market, I'm going to go ahead and make another video for the stochastic numbers and the MACDs for that number, or the numbers for that trade, or for those indicators, I should say. But for now, I'm going to go ahead and go with the basic ones. And I'm going to go ahead and share the whiteboard because it's already all written down. And that's the stuff that you guys can write down. And yeah, so thank you guys for being on the call. Hopefully you guys enjoyed the music. I'm going to go ahead and be sharing the chart to also help you guys understand this video and what it is that we're talking about, because anybody can do this. If I can do this, you can do this too. So this is simple, okay? We're going to go over this setup. You don't have to pick the same pair, okay? Doesn't have to be the same pair, but the coordinates do apply to every pair. Okay, so whether you're trading, gold, silver, those commodities, these indicators still help you for those trade setups as well. It's just going to look different in the numeric order, in the numeric numbers category of the trade setups. That's the only thing that's going to be different because gold, it likes to play like 1900, 1800, and you have to find that in your forex trade setups. So that's something that you can work with. Me a little bit more hands-on, but today I'm going to keep this very basic for you guys. I'm going to go ahead and share my screen. That way you guys can see it. Okay, so EMA Technicals 101. Support and resistance. You want to mark at these key levels. So you want to mark at 0.300, 0.600, 0.900. These are going to be your key areas to mark your trades. I'm going to go ahead and show you guys on my chart what that looks like. That way you guys can see it for yourselves. But again, guys, mark these up right here. And then these are going to be your supply and demand areas. Okay. This is going to be a place where you're going to see a lot of action, volatility. I'm just going to put a V for volatility. And then your exponential day moving average. This is going to be one of your best tools to measure whether you're creating a ceiling or whether you're creating a floor. Because a lot of trades, if you don't, really pay attention to the 50-day or the 200-day, you don't understand if it's going up or down. And if you look at it on the 5-minute or the 1 minute, it can be very confusing. So we're going to go over that, what I usually look at before I go into the smaller time frames, which would be the 4-hour time frame, and then the 2-hour time frame, as well as the 1-hour time frame. So you guys can also take note of that. Indicators I like to use are the stochastic and the MACD. I use the RSI on my phone. I'll go ahead and do another video for the RSI. But for now, I'm going to go ahead and do the video for what we have here on the screen here. If you would like to keep subscribing to our channel, you can at Mindset U Trade. Okay, you guys can subscribe at Mindset U Trade on our YouTube channel, and we actually share videos every single week on Sundays, and usually Tuesdays and Thursdays videos are recorded as well. This one's more a team video, so this is going to be more for the people that are on our team. It's going to be basic information. We'll go ahead and break down the chart for you guys. Right now, we got one of our students on the call, and I'm going to go ahead and answer the questions. So if you guys are ever live on these calls, you guys can ask the questions. Should they start looking at the far time frame? It depends, bro. So if I'm looking at if I'm looking at the setup like right now, if I want to take, for instance, right now we got Sydney session going. So it's about to start. So it's already in Australia. It's already Tuesday. So it's already good to look at those pairs. So in this case, I would look at the 4 hour first. If it's on the weekend, I like to do my day and week marking up. Okay, that's what I like to do on the weekend, bro. I like marking up the day and the week, and then just looking at the month time frame on the weekends, because you don't like your trades are stopped, so you get the opportunity um, to look at your setup while it's not moving. But when it's moving, you want to start on the 4 hour time frame. So it's a yes and a no. It's one of those things to where I'm glad that you asked the question. That way you can take all barriers away, because sometimes people want to do it a certain way, and you just want to incorporate the time frames. So if you do look at the daily and the weekly and the monthly, you want to do that on the like Saturday, Friday, Saturday. Then come Sunday, you want to start looking just at the 4 hour, and then once you have your 4 hour markup, you can spend time on the 5 minute time frame. Good question, bro. I'm glad you asked the question too. I'll go ahead and share my screen. That way you guys can see how that looks. So I'm glad that you guys are taking note of this. Thank you guys for watching this video. And then just to give you guys a little preview of what this trade is doing right here, for the people that are going to watch this a little later. This trade's still running. So it's at the area to where I first initially saw the inverted head and shoulders. This is what's called an inverted head and shoulders. When you see something like that, you can see an extension and watch for your pivot right in that area, which should be right at one of those areas that we had spoken about. Go ahead and answer your question, bro. Which would be one of those areas that we had spoken about right at 300. That's one of those levels that I had just shared. So 1.71300. Okay, so it's usually the third decimal after the second one, because the price is 1.71. That's the price, and then the pips are 30 to 70. So that was 40 points. But we have the price bar, okay, and then we have a bit of action right there. We have two red lines. So we have one at 300. Obviously, when you break down the time frames, you can see them more spread out. But right now, you see the key zones are 300 and 700, and that's where it looked like it took off from that area. So those are the coordinates that we have marked in the whiteboard that indicated that was a buy in that area. Now, is it going to do the same thing? That's what we want to look out for, because if in that area it creeps down to here and it rejects, so it starts showing you something like this here, you can look for the trade to come down. But as I see here in the stochastic, the trade looks like it wants to pull back upward and do something like this. So at least match this area right in here, and then decide on coming down possibly. So that's what it looks like it wants to do right there. I'll go ahead and answer your question. Appreciate you, bro. And then this setup right here that I shared with you guys, like I said, if it's coming faster and it comes down now, you want to go with the first option that I had indicated, which is this one right here. And then if you see it creeping up and find support here, you could take your long position right in this area. So that's for the little preview on this setup right here. I'm going to go ahead and clear all my drawings and get into marking up those areas. That way you guys can see them. I'm going to use a pair I normally don't mark up. I normally don't trade U-Chief, so I'm just going to go ahead and demonstrate it with U-Chief. I'm going to put it on the day chart. Okay. And as you guys can see there, I keep my thing simple. I just drew a trend line. It was even simple, and it sold off from that trend line. Let's see, the EMA. So the EMA, just to show you guys a preview of that, you guys can just circle it, that way you guys can see it. Right up in here, you see the EMAs, okay? So when you see those EMAs, you can really, literally just click right here, the circle. It's like a little setting circle. I have mine at 21, okay? But what I want us to do is put it at 50. That way you can start seeing the trend better for yourself. Because I know when I first started doing this, I started looking at it. It's already had the 50 day. So what I'm going to do is make it 200 instead of 21. So you want to have 50 and 200 instead of 21 and 50. 21 and 50. 21 and 50 is for when you're getting a little bit more acclimated with the market. You're a little faster with your reads, and you can see things a little faster. But for now, I want us to start at 50 day and then 200 day. That way you guys can see the space in between the trades, because that's what you see right there, the space in between the trade. And that's where it's more than likely going to fill in that space. And that's what it looks like it's doing right in this area. It looks like it wants to do something like that to continue maybe going upward like UCAT. That's what it looks like for USD Chief. But what we can see is we can see the space because of the trade being the EMA, so the exponential moving averages being at 50, being the blue one, and the orange one is the 200 day. Okay, so that's where I suggest that you guys keep the blue EMA at 50, and then the other one at 200. Or if you want to flip the colors, that's up to you. That's just the way I have it. And if you want to change the colors, you can too. It's up to you. If you want to change the colors on your chart, it's cool too. Okay, so that's the EMAs. And then let's see, the stochastic is what I have here. I love the stochastic personally. I'm gonna give you guys also the read for the MACDs. Or if you guys wrote it down on the whiteboard, it was on the whiteboard. I'll go ahead and share the whiteboard before we end the video. That way you guys can see it from last time. That way you guys can take note of that. But right here, we see the volume going back upward with the stochastic. For me, I see it clearly. And this is the way it looks. I know a lot of people, if you're new to this, you're like, how do you know that? Because it did that over here. Right? And I've been watching trades for quite some time. So you're going to look for something like this. And then you're going to see something like this and then potentially go up. Similar to something like this from what I've seen in the literature. So if it doesn't do that, then it's going to pivot right in this area right here now. So that'd be pivoting now. So it would continue going upward now. That would be the move now. If that's how, you were to, take it right now. If it was moving right now, that's what you would want to do. But since it's not moving, you want to play the down play first before you take the trade up in this area, if that makes sense. So before you take that trade in that area, you want to go with the red option first, which would be your sell. That's why a lot of people sell their trades. That's why a lot of people do the short positions, because of stuff like that. Because when you see the space between the EMAs, which are at 50 and at 200, you can potentially just catch the sell right in that area, which would be right in here. Arrow it right in this area. So right when it rejects that area right there. So it potentially breaks that area. Because once it gets in that space, it's because the lines want to get together and it wants to make a move. So in order for it to go up, you need the EMAs to actually get a little closer together. Something similar to this area. So you want that to form somewhere down here. You want it to form somewhere down here. Maybe a little lower even. Because it looks like it needs a lot of volume. So once it pivots at the 50 area, so I wanted you guys to keep note of the 50% area, because if you guys can see the percentages on the side right over here, that's what the percentages are. So the 50 area is the area that you want to look at. That's somewhere right in here. So once it creeps up into that area, it usually shoots upward and then it comes down. If it holds there, it's going to continue wanting to do something like this, and you can potentially take it for your buy. Once it does that in the stochastic, but you have to wait for the indicator to actually show you that clear signal on the 5 minute. right now we're going to keep it basic and just go over the actual coordinates to your trade setup, which is the 50-day for the EMA and the 200-day for the EMA. That way you guys can see the space in between. Okay. Everything else I want you guys to evolve into. So we are gonna keep evolving our videos more and more as we grow together as a community, as a team. So that's amazing that you guys took note of that. Let's see. So the MACD, so the stochastics, I'm gonna go ahead and put it at 35, 5 and 5. That's the number you guys saw on the whiteboard. 35, 5 and 5. Those are going to be the numbers that you want to input on your stochastic. Okay, and if you don't know where those are, it's going to be right up in here in your indicators. And that's where you would look for your relative strength index, which is your RSI. Your EMAs are called exponential moving average. So it's going to be this one right here. For the people that don't know where that is. And then go ahead and answer your question right now in a second, brother. And the stochastic, you can use this one. Once you plug those in, on the free trading view, it allows you to have 2 indicators. I usually just use 2 indicators myself. I don't need more than that because I apply a lot of the candle, a lot of the candle just observation that I do because I've been doing it for quite some time, and that's what I use as my main confirmation. Indicators I use like as a secondary confirmation, and where I look is those percentages that I shared with you guys. So if you guys didn't take note of that, go ahead and replay this video and see how I marked it up. But it's the 50% area. That would be for your stochastic, for your RSI, for your MACDs. They're all going to have the 50% area. The stochastic is just a little faster indicator, so I like it personally. A little bit better. So that's after the stochastic. Let's say, and then the MACD. So let's say I want to do the MACD. I'm going to plug it in for you guys. You guys can see the volume going upward as well. Like right here, it went upward, and then it went upward like it tried to go up right in this area. The area I'm talking about is right here. It jumped right up, boom, gave you 3 waves to try to go up, and then it just failed downward all the way to where it's at right now, currently. And that's because of the pandemic. There's a lot of business that was being done between us and Switzerland, so that's why this pair obviously took the route that it did. But you can still use those coordinates and those numbers to be able to find that trade setup. Obviously, if you keep track of news, articles, and if you keep up to date with your Forex Factory and with your group mindset. UT has wonderful groups that we have set up for people on Facebook, and then we also have our Telegram group, which is our Signals group, which is where I post these personal videos that we're going to share with the team and the people that have invested. The marketing videos, bro, we're going to just go ahead and just do the way we're doing on Sundays and the way we're doing on Thursdays. Thursdays is for us to take a closer look at our setups. And if you have any questions, and if you get any trade setups wrong, send them to us. That way we can do a video similar to this one. That way you can help yourself through that video, or through maybe the chart markup, that something you may have missed, because you may have said, for instance, I'll give you an example. You may have said this is a buy right here, right in this area, and then it sold off right here, and you had it held in, and you're like, dang, why did it sell off? I lost a lot of money, or burned my account, or whatever the case may be, right? Well, that's just because you may have not looked at a candle or two properly. That's all that is. because your indicators, I want you guys just to follow those coordinates that I shared with you guys. The MACDs to finalize our video. I'm gonna go ahead and put 5. Okay. 5 and 35. That's where I'm gonna put mine. The MACDs I personally keep halfway if I do use them. That way I can see the breaks and the trades. I use those stochastic at this point because it's a little bit more cleaner for me for what I like to do. So right here you want to like, the percentages are different on the MACDs. So you want to like find, this one's more candle and indicator oriented. So when you're looking at the MACDs, you look at where the volume died off right here, right in this area. I'm going to go ahead and answer your question right now. For the MACDs, you want to see where the red volume died off, so the sell, and then where the new volume continued, which is right in that area right there, which is right here. That area is right here. That's where you can catch your buy on the 3 volume bars that the MACD showed you right there. So personally, like I shared with you guys, I like the stochastic, but I always use the MACD for the same thing, for volume, just for confirmation. Swing the chart over to the trade. Perfect, bro. That's how we're gonna all get better, bro. I know that for me, like when I took a trade and I lose, it's either because I'm trying to go too fast in the setup, and I don't know if I want to swing it or if I want to keep it in long term. What helps me decide if a trade's good or not is if it's doing something like this. Like right now when I see it, it wants to swing back up, it wants to carry the momentum. USD Chief operates a lot with like the DXY. This is why like indicators I just look at because I see it supporting right here in the MACDs. So right here you can see in the daily. I'll start going to the daily first. See right there? You can see the support little pockets you see right in there, right in here, right in here, right in here, and then right in that next level. So that's what it's creating, that next level. So what I see it doing, because of this candle right here, is I see it creating a floor right in that area. That's why I said anything above that area, wait for the retrace and catch it somewhere in this area right here. Once it does this again. So it's gonna do something like this, either right here or right in this area. And I'm glad we're on this call, bro, because this is our personal private calls. So when people are like wanting to know more about this, just let them know. I can get them to this level. This is obviously more of a coaching level. This is why I like the fact that you like basketball and you're very athletic, bro. Because you understand the market. You're gonna understand the market a little bit better than most people. So the RSI, I want you guys to mark that up if you guys do it on here as well. Mark it up on the 14-day. That way it's accurate for you guys. For the MACDs, just follow what I shared with you guys, and you guys should be able to see if you guys want your trade set up for a long position. Like right now, I see USD Chief for a long position because of what I see right here, and because of the behavior that I've seen, in the past, and just everything I'm seeing and how it ties into the DXY. The DXY is positive today, so. And it's giving you the same indication as the MACDs. This is where the indicator begins to share with you the same thing as another one. And you see the same volume happening right in here. The possibility of it continuing up until that area to create either a higher high or maybe a lower pattern to continue the sell-off. So look for maybe October, November, December for them to be like this, and then look for that change of momentum for a lot of people and a lot of jobs and a lot of things that are happen next year. As you guys can see, it might even happen sooner before the elections. So it's something that's super important to key in and focus on. So this call is going to be on YouTube, but it's going to be private, bro. Okay, we're going to put this call in the Telegram group. That way you can rewatch it. Hopefully it was worth your time. I know it was. I always just like to say that, too, because I'm humbled to be able to teach this, because I love, doing this. I really love doing this for a living. And I don't see myself doing anything else. I love doing this. So going back to what I had earlier on our whiteboard, this is what you guys want to keep in mind. All these technical areas. So 300, 600, and 900. And I'm going to go ahead and make a whole nother video for the 300, 600, 900. I just wanted you guys to have those areas. That way we can move into that next little class that we have going on. So this will be for next time, all right? For now, focus on what I taught you guys in the markup setup part of this video. So I appreciate you guys all for your time. I appreciate you, Eric, for being live on this call. And I appreciate you guys also for making the time to watch this call. I made it short and sweet and to the point, that way you guys can have the information necessary for your trade setups. I love you, bro. I love you, bro. God bless everyone, and God bless you, bro. Thank you guys for watching this call. You guys are all amazing. Love you guys.